NPTC's numbers, when we started off trade, everyone thought that those numbers were disappointing. Well, that stock, just take a look at it, ended virtually at the high point of the day. IOC came out of the set of numbers. First look at it, it looks disappointing, but the street wants to buy into these names. They believe they're generating a number of cash. Post general election, maybe the risk with regard to, on petrol prices, that's behind them. And those stocks actually, they were shining in today's trading session. But let's run you through what we have on the show for you today. We start off with all the top movers and shakers of the day with Vivek. Well, stocks on our radar include Colgate, Varun Beverages and NTPC. And stay tuned as we tell you why these stocks are buzzing in trade. CNBC TV 18's popular segment, D Street Chatter, is also on the show. Nimesh will be joining to tell us why protein was buzzing in today's trading session. Last but not the least, we'll delve into the key market events you need to track for tomorrow's session. But let's get straight to the top movers and shakers of the day. Vivek joins us to help us out. Vivek, take it away.
Well, thank you so much for that. Very volatile trading session, like you mentioned. But the first set of stocks, that'll be on our radar is the entire PSU basket. You did allude to the OMCs. In fact, some of the top gainers, even on the broad end of the markets, were these names itself. Along with that, even NTPC and Colgate post the analyst meet, they too joined the rally. So OMCs and past utility stocks did very, very well in the session today. In the second half of the trading session, you saw a spurt in the agrochem space. Even fertilizer stocks did very well. So have a look at some of these names: UPL, SRF, Tata Chem, Deepak Nitrite, GNFC. All of these stocks, especially towards the later half of the trading session, saw a spike in the session. Along with that, insurance stocks. You alluded to this earlier, but both life insurance as well as health insurance companies, a lot of them actually saw quite a bit of spike, cooling off a little bit towards the day's end. Now, moving on, one stock that stood out today was Kansai Nerolac. Within the paint pack, Kansai Nerolac actually delivered quite a muted set of numbers, but the company gave strong commentary, and they also alluded to price hikes in the range of close to 2%. On the back of that, stock ended high by 8%. And Apar Industries, declared its results during the market hours itself. And on the back of that very strong set of numbers, 5% higher for Apar Industries. On the other hand, quite a few stocks saw quite a bit of selling pressure as well. Varun Beverages, good set of numbers, but despite that profit booking seen after the stellar rally the stock has seen, in fact, it ended as a top NSE 500 laggard. CSB Bank, came out with its results day for yesterday, weak set of numbers. Markets digested it today, down 4% lower. And lastly, Exide Industries, again another stock, despite reasonably good set of commentary that the management gave, the stock saw quite a bit of selling pressure emerge after the results were declared. Exide is the one that we're talking about.
Okay, yes, lots of reactions to earnings, Vivek. Thank you very much. Busy day today, going through a lot of those movers and shakers. Let's talk about the ones that really stood out. Vivek, thank you very much for that. Let's now get to the specifics. Colgate-Palmolive really has to be the stock of the day because the numbers were so solid and the stock was sparkling throughout, looking absolutely pristine, even when the market was a little wobbly. The gain towards the end was over 5%, just around 5% after the first quarter solid show came through. We've got Manglam joining in with the details. Manglam, so I think good brushing makes for, happy investors.
I'll just say no cavities in these numbers. Let's put it that way. The stock was a record high today. Across all parameters, it was a top-down beat. If you look at just, the numbers, the revenue, the EBITDA, as well as the net profit, all of them not only beat our street expectations, but revenue growth of 13% was the highest that we saw in the FMCG industry so far in the first quarter. EBITDA growth 22%, margin improvement of 240 basis points, 33% growth in the profits. So all these factors, whichever way you cut it, they were pretty good. In fact, the company said that it was led by high single-digit toothpaste volume growth. And again, the street was working with a number of around 2 to 3% itself. So that's a big positive. Brokerages were also pretty sanguine on these numbers. In fact, it's the third straight quarter of EPS upgrades from the stable of Jefferies. In fact, they've increased their, target price from a little over 3,000 to about 3,570 as well. ICICI Securities says that, these numbers are pretty strong. They estimate the volume growth to be around 8%. But with the concern that after a big rally that the stock has already seen at 50 times FY26 earnings, maybe it is a little stretchy with a few risks. So just hold is the rating that they have. And finally, we did have a comment coming in from Bank of America. While they maintain their underperform rating, remember they've raised their target price from 2660 to around 3175. And at the same time, they've increased the premium, the multiple that they pay to a 20% premium versus what it was over the last 5 years as well. So it was, increased penetration of their products, faster growth in some of their premium products, and at the same time, improvement in their margins along with 8% volume growth that the street liked, and the stock hit a fresh record high today.
Okay. All right. Got that. So that's Colgate Palmolive. But Mangalam, while there was one big hit in the consumer space, there was one big miss as well, right? And it's a company that usually doesn't miss. Varun Beverages. What happened here after the numbers?
Well, one cannot call that a miss for Varun Beverages. Yes, it was a miss on the stock price move, post numbers down 6.5%. But remember, it's already seen a 100% rally in the last 12 months, and preceding 12 months, it's seen another 100% rally. In fact, over the last 5 years, the stock has moved over 1,000% itself. The stock split that the company announced with the results was also, one of the factors that had the stock a little, off in today's trading session, but could be just a one-off because revenues, no problems. There was a strong quarter, 28% growth in the company's revenues, close to 7,200 crores on the top line. If you look at the gross margins, that also improved by 220 basis points. EBITDA coming in just shy of 2,000 crores with a margin of almost 28%, along with net profit coming in at around 1,260 crores. The volume growth for them was 28% as well, where India volumes grew by 23%. And if you look at the carbonated soft drinks, which accounts for nearly 75%, 76% of their sales, came in at around 32% higher. India, Sri Lanka, Nepal, which is the core of the business, accounts for about 83% of the revenue. And Africa, which will start to contribute in the second half of this year, largely because the current quarter was a low season. Africa in the southern hemisphere, so it's more winter than summer there. Net debt at around 5,880 crores, also pretty manageable given the size of their balance sheet. We had the management on our channel and they targeted overall volume growth at around 18-19%, the same as what they've done in the first half of this year, with margins maintained at current levels. Sting, which is a growth driver for them, was 7% in the same time last year, is now 15%, and they target this number to be about 20% by the end of this year as well. And Africa Snacks will add some new revenue verticals to the company ever since they've announced this additional ancillary plan with PepsiCo in Africa. So that would be another driver to watch out for.
Okay, Mangalam, thanks a lot for that. Well, let's welcome our best. We have Bala of Cash the Kiosk who joins in, as well as Mayuresh Joshi of William O'Neill. Hi, gentlemen. Thanks a lot for joining in. Well, Mayuresh, I wanted your view actually. Mangalam just told us about a couple of those stocks that were buzzing in trade, Varun Beverages as well as Colgate. Now, Colgate has seen a big run, but the street likes volume growth. They like the numbers that they've seen. So you may want to pay a higher price for stocks that are performing. Your view on both these two names?
Afternoon, Nigel. No, absolutely. I think numbers were stellar as far as Colgate is concerned. And the expectations in terms of a strong rural recovery in the second half will mean that volume should be even better as we head into the second half and the next financial year. Obviously, I think the SKUs that a lot of FMCG companies have, including Colgate, for the rural market, for the semi-urban and the urban markets, as rural bounces back very smartly, there should be an accelerated growth that you probably see in terms of volume numbers being maintained, with input costs expected to remain largely stable and more products that are probably being expected to get introduced. There is greater hope in terms of this volume growth sustaining going forward. Obviously, on one hand, you've got valuations which are not too cheap, but on the other hand, you've probably got some triggers which might still be playing out for Colgate. So I think anybody holding Colgate should definitely hold on. For Varun Beverages, as a clear disclaimer, a few weeks back, we offloaded this stock from our global portfolios. The valuations, in our opinion, are a tad bit too rich at this juncture. As Mangalam pointed out, last couple of years, this stock has given a stellar move. Obviously, I think the kind of dominance that it has when it comes to Pepsi, both for India, Sri Lanka and the Nepalese markets, that dominance should probably continue as far as volume growth is concerned. Sting, their energy drink, is something that should continue doing well. And water's contribution as part of the overall top line in EBIT should have a steady state show as well. Obviously, how Africa contributes going forward in terms of both the value-added products and more products expected to get introduced there is something that will keep earnings in momentum as far as BBL is concerned. Obviously, I think there has been an element of profit booking for the sheer outperformance, both in terms of price and earnings that the stock has delivered. But we have, as I said, on the safer side, booked some money off a few weeks back.
Okay, all right. Mayuresh, stay on. Some more questions in just a bit. We also have Bala of Cash the Kiosk with us. Jay, what's your sense, on a lot of these consumer names? Do you see any trade here? What would you do with a stock like, say, Colgate? Tomorrow, Tata Consumer, by the way, is coming out with numbers. So anything you like at all?
Yeah, I like Colgate, and Colgate has potential scale as far as 3,600 to 3,800, so quite bullish, and momentum is absolutely backing the price action. So further higher highs due, probably lent, the stock will probably add weight to the FMCG index. If the anticipated macro were to weaken in the global macro, this could also be a defensive play. So it's a multi-pronged play for the stock. Also, amongst the stock that you spoke about, PCBL, that's looking very interesting. It's got a continuation inverse head and shoulder breakout. It's probably going to fresh all-time highs, and it's slightly behind the clock. I was bullish on it in March and slightly went below the stop loss during the middle of this year. But it seems like it was a bullish and bearish strap, and looks like PCBL is heading to somewhere close to 400 plus.
Okay, all right, Jay, got that. Viewer, stay with us, gentlemen. Let's move to the sector of the day. Power. Two stocks were charged up in trade, NTPC as well as Power Grid. Vivek joins us to tell us about a quick analysis as well as commentary coming in from the management. Vivek, take it away.
Well, over the weekend, both the NTPC as well as Power Grid came and gave their results. NTPC delivered a strong performance, while Power Grid missed analyst estimates. Now, on Monday, that's yesterday, both of the companies actually held analyst meets where NTPC went and gave a guidance in terms of number one, the capex, number two, its capacity, and what is it that the company expects in terms of regulated equity. When it came to Power Grid, they gave capex as well as commissioning timelines as well as a guidance over there. Now, talk about NTPC, very aggressive capacity addition plans. Remember, India is looking to add close to 80 gigawatt of thermal capacity by 2032. NTPC will be adding close to 26 gigawatt of that. Renewable energy, what is it that they're looking at? They're targeting close to adding over 60 gigawatts, and along with that, they also alluded to the fact that the NTPC Green IPO is on track. The company is targeting a commissioning in FY25, thermal commissioning in the range of 2 to 2.5 gigawatt, and pumped hydro in the range of 1 gigawatt. Commissioning in terms of what is it that the company is expecting will lead to regulated equity seen in double-digit growth over the next few years. No wonder then brokerages were quite bullish. Jefferies went and raised the target price to 485 rupees a share. CLSA has a target price of close to 441 rupees a share. Now, coming to Power Grid, the trend that we are witnessing is the fact that the company is continuously going ahead and increasing the capex that it has and also the capitalization. So the capex, remember, FY25, they started off the year saying that they expect capex in the range of 15,000 crore. Now they've gone ahead and raised it higher to 18,000 crore. FY26, they're expecting it in the range of 25,000 crore, and FY27 over 30,000 crore. Talking about capitalization, what is it that they're anticipating? 18,000 crore in FY25 versus an earlier guidance in the range of 15 to 16,000 crore. FY26 and FY27, they're expecting over 25,000 crore. Now, along with that, they also said they have work in hand as well as the transmission capacity pipeline of over rupees 1 trillion. So very strong capacity addition from NTPC, very strong transmission bid pipeline for Power Grid. No wonder then the sector of the day today was the power space.
Okay, all right, got it. Thanks very much, Vivek, for that. Yes, indeed, those power stocks were really fired up. Jay, on the charts, do you like anything, and do you think that this has more steam ahead? I mean, the likes of NTPC, Power Grid, or anything else in the power sector?
Yeah, 2 weeks ago I had mentioned Tata Group as a theme, as being quite bullish. So Tata Power hasn't yet moved in this leg of the move along with NTPC and Power Grid. So probably that with a stop loss of about 394 or 395, that'll make sense. These stocks, PSU stocks, have moved quite a bit, and the final high looks a bit exhaustive. So if this were to continue higher, Tata Power has higher potential than these PSU names.
Okay, all right. Thanks for that, Jay. But Mayuresh, let's come across to you as well. Fundamentally, how are these stocks looking?
I think very well placed. So as Vivek explained it, the expectations in terms of the power capacity additions on the renewable side is expected to touch 500 gigawatts over the next 8 to 10 years. And there will be accelerated investments that NTPC and Power Grid do a large part of this heavy lifting as well. Having said that, the expectations in terms of regulated equity actually improving at a good pace with the kinds of projects that are getting commissioned, the kind of capex that is expected to happen over the next few quarters will mean that the regulated ROEs should remain relatively stable for both these companies as well. And that will mean that there should be a steady state show as far as the earnings growth is concerned. Obviously, I think NTPC with a dividend yield of 2%, power grid with 3.5%, also look attractive as far as the yield component is concerned. From the generators, I think I would agree with Jay. I think Tata Power has hardly done anything, but there is a lot of expectations in terms of deliverables that Tata Power can have. CAC from the generator space as well is something that can continue doing well in terms of the sheer capacities that they will add over the next few quarters.
Okay, all right. Thanks a lot, gentlemen. We appreciate you joining in, giving us your take on the index as well as on individual stocks. Look forward to chatting up with you rather soon. Well, let's go to our next segment then, which is corporate options. Opinions coming in. First on the list is KEI Industries. After a good quarter, the management is confident about FY25. They have guided for revenue growth in the vicinity of around 16 to 17%, with margins holding at around 11%. That's not all. It's also looking to increase the share of exports in the total sales pie from around 11% to around 15% in FY25. Next on the list is Zen Technology as well. The management sounded extremely confident on the way ahead. The company expects to do 900 crores in revenues with margins in excess of around 35% in FY25. Also in the coming quarters, the company is likely to close out an acquisition which could be valued anything between 100 to around 500 crores. And for that, they said they could also be looking at a potential QIP.
All right, looking at paints company Kansai Nerolac, the management guides for mid to high single-digit volume growth as they expect volumes to improve. They believe that the competition will spur better growth for the industry. Next on the list is Maharashtra Seamless. Q1 was hit by high-cost raw material inventory. The management guides for a recovery with margins of 19 to 20%. Also adds that the company has appealed to the Indian government to enhance the anti-dumping duty on the import of some goods from China. All right, with that, we'll take a quick break. Come back on the other side and we will get you D-Street chatter. Let's see what the buzz was around this sell-off today. We'll have Nimesh joining in. And then, of course, all the events to watch tomorrow.